I'm Lee Chun Kit, Senior Business Development Dealer at Phillip Futures. For the next few minutes, I will discuss QE tapering and explain how it affects stock indices. Let's begin with a background of the Federal Reserve and the QE. 17th of September is an important date because of the US FOMC meeting, which will take place on 17 September to 19 September. During this meeting, the FOMC committee will likely discuss whether to scale back asset purchases, a process commonly known as quantitative easing or QE. The market are expecting QE to be tapered during the 17 September meeting, given the improvement in the US economy. The improvement in the US economy is also supported by various recent economic data, and these factors leave lesser room for the Fed to maintain QE. Currently, there are still divided opinions within FOMC committee, with some committee members favoring the maintenance of QE till next year and the other in favor of sooner tapering. Although QE had not been tapered yet, the market have already anticipated and reacted to the possible QE taper. This has affected stock indices around the world. Let's look at the performance of some stock indices between May and July this year. MSCI Emerging Market Index has fallen 18%. Shanghai Composite Index has fallen 21%. The Straits Times Index has fallen 14%. The good news is that these indices has since recovered from the low last week, thanks to the positive economic data in the United States and China. This better than expected economic data has directed investors' attention away from the uncertainty of QE tapering. So, the question now is, will there be another round of sell-off in the emerging market if the Fed were to taper QE by end of this year? In my opinion, QE tapering is unavoidable. As Ben Bernanke is expected to step down in January next year, I believe there is a high possibility that QE will be tapered by end of this year. The tapering would more likely be done as a first step in trying to put an end to what Ben Bernanke himself has started. I am not expecting a full withdrawal of QE, but probably a 10 to 15% withdrawal. And I believe the market right now has already priced in this percentage. Therefore, the market should be able to accept any QE taper within 15 to 20%. I do not foresee any major sell down within this range. There may also be a possibility of renewed buying interest from investors who have overreacted previously. I will conclude with my outlook on stock indices. Based on all the factors mentioned earlier, despite recent sell-off, I am still bullish on equities in the long run. With this, I end my short commentary. Again, I'm Lee Chun Kit, Senior Business Development Dealer at Phillip Futures. Tune in next week for more Market Watch videos.